Welcome to our deep dive into the future of private funds. In this video, we'll explore the latest trends and predictions shaping this dynamic sector. Private funds have long been a cornerstone for sophisticated investors, offering unique opportunities and challenges. As the financial landscape evolves, so too do the strategies, regulations, and technologies influencing private funds. Whether you're an investor, fund manager, or simply curious about the world of alternative investments, this journey will provide valuable insights into what lies ahead. Let's begin by understanding the current state of private funds and why their future is so closely watched. Private funds are investment vehicles that pool capital from a limited number of investors to invest in a variety of assets. Unlike public funds, they are not traded on public exchanges and are typically less regulated. This allows for greater flexibility in investment strategies, but also introduces higher risks and less transparency. Private funds can include hedge funds, private equity, venture capital, and real estate funds. Understanding these distinctions is crucial as we examine the trends shaping their future. Next, we'll look at the current market size and growth trajectory of private funds globally. Private funds industry has experienced remarkable growth over the past decade. With assets under management reaching record highs, more investors are seeking alternatives to traditional stocks and bonds. This surge is driven by the search for higher returns and portfolio diversification. Institutional investors, such as pension funds and endowments, have significantly increased their allocations to private funds. As we move forward, the industry is expected to continue expanding, fueled by innovation and global capital flows. Let's explore the key drivers behind this sustained growth. Several factors are propelling the growth of private funds. First, low interest rates have pushed investors to seek higher yields in alternative assets. Second, technological advancements have made it easier to access and manage private investments. Third, regulatory changes in some regions have opened doors for new fund structures and investor participation. Finally, the globalization of capital markets has enabled private funds to tap into opportunities worldwide. Together, these drivers are reshaping the competitive landscape and setting the stage for future innovation. Technology is revolutionizing the private funds industry. From advanced data analytics to artificial intelligence, fund managers are leveraging new tools to enhance decision-making and risk management. Digital platforms are streamlining fundraising, reporting, and investor communications. Blockchain technology is also being explored for its potential to increase transparency and efficiency in fund operation. As technology continues to evolve, private funds that embrace innovation are likely to gain a competitive edge in the market. Data has become a critical asset for private fund managers. By harnessing big data and predictive analytics, funds can identify investment opportunities, monitor portfolio performance, and manage risks more effectively. The ability to process vast amounts of information quickly gives funds a significant advantage in a fast-moving market. As data sources expand and analytical tools become more sophisticated, data-driven decision-making will become even more central to private fund success. Regulation is a double-edged sword for private funds. On one hand, increased oversight can enhance investor protection and market stability. On the other, excessive regulation may stifle innovation and limit access. In recent years, regulators have sought to strike a balance, introducing rules that promote transparency without hampering growth. As the industry matures, we can expect further regulatory evolution with a focus on issues like anti-money laundering, investor disclosure, and cross-border compliance. Private funds are increasingly operating on a global scale. Managers are seeking investment opportunities beyond their home markets, tapping into emerging economies and new asset classes. This globalization brings both opportunities and challenges, such as navigating different regulatory environments and managing currency risks. As capital flows become more international, successful funds will need to develop global strategies and build diverse teams with cross-border expertise. Sustainability is becoming a key focus for private funds. Investors are increasingly demanding that their capital be allocated to environmentally and socially responsible projects. This shift is driving the growth of ESG, environmental, social, and governance investing within private funds. Managers are integrating ESG criteria into their investment processes, not only to meet investor expectations but also to manage risks and identify long-term value. The future of private funds will be closely tied to their ability to deliver both financial returns and positive societal impact. ESG stands for environmental, social, and governance. These criteria help investors evaluate the sustainability and ethical impact of an investment. Environmental factors consider a company's impact on the planet, social factors assess relationships with employees and communities, and governance examines leadership and business ethics. Private funds that prioritize ESG are better positioned to attract capital from values-driven investors and to navigate regulatory changes related to sustainability. Diversity and inclusion are gaining prominence in the private funds industry. Investors and regulators are increasingly scrutinizing the composition of fund management teams and investment committees. Diverse teams bring a wider range of perspectives, which can lead to better decision-making and improved performance. As the industry evolves, funds that prioritize diversity and foster inclusive cultures are likely to stand out and attract more capital. Investor base for private funds is changing. While institutional investors remain dominant, there's growing interest from high-net-worth individuals and family offices. Additionally, regulatory changes in some regions are making it easier for retail investors to participate in private funds. This shift is prompting fund managers to adapt their strategies and communication styles to meet the needs of a broader and more diverse investor base. Retail investors are gaining access to private funds through new products and platforms. Innovations such as interval funds and feeder funds allow individuals to invest in private assets with lower minimums and greater liquidity. This democratization of private investing is expanding the market and creating new opportunities for both investors and fund managers. However, it also raises questions about investor education and protection. Fund structures are evolving to meet the changing needs of investors. Innovations such as evergreen funds, co-investment vehicles, and hybrid funds are gaining popularity. These structures offer greater flexibility, improved liquidity, and tailored investment solutions. As investor preferences continue to shift, we can expect further experimentation with fund design and distribution models. Co-investment opportunities are becoming more common in private funds. These arrangements allow investors to participate directly in specific deals alongside the main fund, often with lower fees. Co-investments can enhance returns and provide greater control over investment selection. As competition for deals intensifies, fund managers are using co-investments to attract and retain sophisticated investors. Hybrid fund models combine features of different investment vehicles, such as private equity and hedge funds. These models offer investors exposure to multiple asset classes and strategies within a single fund. Hybrid funds are gaining traction as investors seek diversified returns and risk management. The flexibility of these models allows managers to adapt to changing market conditions and investor demands. These structures in private funds are under increasing scrutiny. Investors are demanding greater transparency and value for money. Traditional models, such as the 2 and 20 fee structure, are being challenged by lower-cost alternatives and performance-based fees. As competition intensifies, fund managers must find ways to align their interests with those of investors while maintaining profitability. Transparency is becoming a top priority for private funds. Investors expect regular, detailed reporting on fund performance, fees, and underlying assets. Advances in technology are making it easier to deliver real-time information and customized reports. Enhanced transparency not only builds trust but also helps funds comply with evolving regulatory requirements. Risk management is at the core of private fund operations. New tools and methodologies are helping managers identify, assess, and mitigate risks more effectively. Scenario analysis, stress testing, and real-time monitoring are becoming standard practices. As markets grow more complex, robust risk management will be essential for protecting investor capital and maintaining fund stability. As private funds become more digital, cybersecurity is a growing concern. Protecting sensitive investor data and proprietary information is critical. Cyber threats are evolving rapidly, and funds must invest in robust security measures, employee training, and incident response plans. A strong cybersecurity posture not only safeguards assets but also enhances investor confidence. Digital platforms are transforming how investors interact with private funds. Online portals provide easy access to account information, performance reports, and investment opportunities. These platforms enhance the investor experience by offering greater convenience, transparency, and communication. As digital adoption accelerates, funds that invest in user-friendly technology will be better positioned to attract and retain clients. Artificial intelligence (AI) is making its mark on private funds. AI-powered tools can analyze vast datasets, identify patterns, and generate investment insights. These technologies are helping managers optimize portfolio construction, automate routine tasks, and improve risk assessment. As AI becomes more sophisticated, its role in private fund management will continue to expand. Blockchain technology is opening new possibilities for private funds. Tokenization allows fund interests to be represented as digital tokens, enabling fractional ownership and easier transferability. Blockchain can also enhance transparency, reduce settlement times, and lower costs. While still in early stages, these innovations have the potential to reshape how private funds are structured and traded. Private funds are expanding into new and alternative asset classes. Beyond traditional private equity and real estate, funds are investing in infrastructure, private credit, and even digital assets. This diversification allows funds to capture unique opportunities and manage risks across different economic cycles. As investor appetite for alternatives grows, we'll see continued innovation in asset allocation. Private credit is one of the fastest-growing segments in the private funds industry. With banks tightening lending standards, private funds are stepping in to provide financing to businesses. This trend offers attractive risk-adjusted returns and portfolio diversification. As the market matures, we can expect more specialized credit funds and innovative lending structures. Infrastructure is becoming a popular asset class for private funds. Investments in transportation, energy, and digital infrastructure offer stable cash flows and inflation protection. Governments are also encouraging private investment in infrastructure to support economic growth. As a result, infrastructure funds are attracting significant capital from both institutional and retail investors. Venture capital is evolving rapidly within the private fund space. New sectors such as fintech, health tech, and climate tech are attracting significant investment. Fund managers are adopting more specialized strategies and leveraging technology to identify promising startups. As innovation accelerates, venture capital funds will play a crucial role in shaping the future economy. Real estate remains a core component of many private fund portfolios. Trends such as urbanization, remote work, and sustainability are influencing investment strategies. Funds are increasingly targeting logistics, data centers, and green buildings. As the real estate landscape changes, fund managers must adapt to new market dynamics and investor preferences. Rise of remote work is reshaping real estate investments. Demand for office space is changing, while logistics and data centers are in high demand. Private funds are adjusting their strategies to capitalize on these shifts, focusing on properties that support e-commerce, technology, and flexible work arrangements. This trend is likely to persist as work habits continue to evolve. Sustainability is a growing priority in real estate investing. Private funds are increasingly targeting green buildings and energy-efficient properties. These investments not only align with ESG goals, but also offer long-term value through lower operating costs and higher tenant demand. As regulations tighten and investor preferences shift, green real estate will become a key focus for private funds. Emerging markets present significant opportunities for private funds. Rapid economic growth, expanding middle classes, and infrastructure development are attracting capital. However, investing in these markets also involves higher risks, such as political instability and currency fluctuations. Successful funds will need to balance risk and reward through careful due diligence and local partnerships. Investing in private funds, especially in emerging markets, comes with unique political and economic risks. Changes in government policies, regulatory environments, and economic cycles can impact fund performance. Fund managers must stay informed and agile, adapting their strategies to mitigate these risks and protect investor capital. Currency fluctuations can significantly impact the returns of private funds investing internationally. Effective currency risk management strategies such as hedging and diversification are essential. Fund managers must monitor global economic trends and adjust their portfolios accordingly to minimize currency-related losses and maximize returns. Raising capital for private funds is becoming more competitive. Investors have more options than ever, and fund managers must differentiate themselves through performance, transparency, and alignment of interests. Building strong relationships and delivering consistent results are key to successful fundraising in a crowded market. Investor relations are evolving in the private funds industry. Managers are adopting more proactive communication strategies, leveraging digital tools to keep investors informed and engaged. Personalized updates, regular webinars, and transparent reporting are becoming standard. Strong investor relations not only support fundraising but also build long-term trust and loyalty. Measuring performance in private funds is more complex than in public markets. Managers use a variety of metrics such as internal rate of return (IRR) and multiple on invested capital (MOIC) to assess results. Accurate performance measurement is essential for evaluating fund success, benchmarking against peers, and making informed investment decisions. Benchmarking allows private funds to compare their performance against industry peers. This process helps managers identify strengths and weaknesses, set realistic targets, and communicate value to investors. As data availability improves, benchmarking will become even more important for fund evaluation and marketing. Liquidity has traditionally been a challenge for private funds, which often require long lockup periods. New solutions such as secondary markets and interval funds are providing investors with more flexibility. These innovations are making private funds more attractive to a wider range of investors by offering partial liquidity while maintaining long-term investment horizons. Secondary market for private fund interests is growing rapidly. Investors can now buy and sell fund stakes more easily, providing liquidity and price discovery. This market is attracting new participants, including institutional investors and specialized secondary funds. As the secondary market matures, it will play an increasingly important role in the private funds ecosystem. Fund distribution channels are evolving with technology. Digital platforms, robo-advisors, and online marketplaces are making it easier for investors to access private funds. These channels offer greater reach, lower costs, and improved efficiency. As distribution becomes more digital, funds must adapt their marketing and client service strategies to stay competitive. Robo-advisors are automated platforms that use algorithms to manage investments. They are increasingly being used to offer private fund products to a broader audience. Robo-advisors can lower costs, improve accessibility, and provide personalized recommendations. As technology advances, robo-advisors will play a larger role in the distribution and management of private funds. Client service is a key differentiator for private funds. Innovations such as chatbots, personalized dashboards, and 24/7 support are enhancing the investor experience. Funds that prioritize client service and leverage technology to meet evolving expectations will build stronger relationships and stand out in a competitive market. Looking ahead, the private funds industry is poised for continued growth and transformation. We can expect greater adoption of technology, increased focus on sustainability, and more diverse investor participation. Regulatory frameworks will evolve and new asset classes will emerge. The most successful funds will be those that adapt quickly, embrace innovation, and maintain strong relationships with investors. Summarize, the future of private funds will be shaped by technology, regulation, sustainability, and changing investor preferences. Fund managers must stay agile, continuously innovate, and prioritize transparency and client service. By understanding these trends and preparing for the challenges ahead, both investors and managers can position themselves for long-term success in the evolving private funds landscape. Thank you for joining us on this exploration of the future of private funds. As we've seen, the industry is undergoing significant change, driven by innovation, regulation, and evolving investor needs. By staying informed and adaptable, all participants can navigate the challenges and seize the opportunities that lie ahead. The future of private funds is bright, and those who embrace change will be well positioned to thrive in the years to come.